Welcome back. You're with us on Bazaar Morning Call. Let's get our first conversation going on the markets. We have Deven Choksey joining in. Deven, good morning. Always a pleasure having you on the shows. So, before we start talking about individual stocks, I just want to get your sense on the mid-cap market, because I think the last 2 months, it's not been about the index, it's been about individual stocks. And we've seen gains. I mean, stocks have doubled in 2 months flat. So, in general, do you still see a lot of value in mid-caps? Or are you slightly more concerned with the quality, with the pace of the rise now?
Sure. Good morning, Survi. Well, in general, I would say that I think the market is buying stories. I think they are probably not getting inside the details. And those stories would be related to railways, related to defense, or for that matter, I think anything to do with the technology. I think simply without applying the numbers, they are basically buying those stories. And that is where probably one is slightly concerned about at the same time. That while underlying potentials for those companies remain high, but at the same time, the valuations are stretched in some of the mid-cap, small-cap companies. And that would probably mean that I think some of the companies would probably pay back to the investor on the market capitalization in 1 year or 1.5 year time, that kind of stretch valuations that they have given. So from that perspective, I think one has to be extremely careful about getting into the market and believing those stories, unless one has done detailed homework on those companies from the fundamental perspectives. So we believe that, yes, I think there is underlying opportunity. One will have to be selective. At the same time, I think one will have to be extremely mindful of the high price that you are paying for some of those companies. Currently, the entire rally is being fueled by the typical class of HNI investors who are shifting positions from one company to another company because of the relatively lower size floating stock available in the market. And as a result of which, I think with a reasonably good size of money, I think that they put in, I would think that I think they are basically making the killing out of it. So that is where one will remain a little bit more cautious at this point of time.
Okay. Deven, hi, good morning. I don't know if this is a believable rebound, but there is a rebound nevertheless in some of these large tech companies, right? So this week, for example, Tech Mahindra is up 3%, HCL Tech has rebounded about 2-3%, TCS, Infosys has seen some buying. Do you think this is just a dead cat bounce, or is this something that you would want to put some money to work in the technology space now?
Good morning, Sonia. Well, I believe that I think the technology is one space where probably I think you will have to stay invested. And this is the opportunity that you are getting currently because of the external environment in the global market remaining uncertain. You're getting an opportunity to buy some of the good quality stocks at a valuation, which is probably, I think, far more comfortable than ever before. Likes of Infosys available to you at around 17-18 forward P. I would think that my downside is probably limited in this kind of a business. Given the fact that the opportunity basket is growing for most of the technology companies, particularly the niche players in mid-cap space, I think are definitely having relatively better visibility. But the fact that the larger players like Infosys, TCS have a good amount of large size contracts, which are giving them the sustenance power for next 4 to 5 years, I think, given those kind of contracts that they have signed up. Though they may have probably slowed down in recent months to a certain extent, but still it is not taking away 15% kind of a growth for these companies in a normal situation. So from that perspective, I would think that the current valuations are giving an opportunity to buy into some of the good quality IT stocks, technology stocks, where I believe that the trend will continue to remain favorable for them as far as I think the prospects are concerned going forward.
Deven, it's also, I mean, another way to look at the market is that nothing stays down for very long. Underperformers, like, for example, take the life insurance space, which is starting to make a comeback. Even the asset management space. I mean, we saw what happened with HDFC AMC, and we'll have something that Kotak has put out this morning with our research team in just a bit from now. So that is another way you can do it, right? I mean, you can go after momentum, but then, as you said, you got to constantly move, you got to constantly shift and be watchful. Or you try and buy where there has been lack of interest and stocks are still down, and wait for momentum to get into that space. I mean, anything comes to your mind? I was looking at, for example, these EMS companies, Dixon, Sirma, Keynes, Amber. This quarter has been exceptional, 60-70% gains quarter to date, and 15 days to go for the end of the quarter, Deven. Anything comes to mind?
So, Prashant, all those companies remain extremely promising and they are quite attractively positioned as far as I think the business outlook is concerned. They have relatively, I think, a good amount of order book in place at the same time. However, I think the bigger challenge continues for investors, particularly because of the larger amount of, I think, the valuation that you are paying for. And that is where I would think that I think one will have to remain a little bit more watchful. I'm not against, I think, the thesis that the companies are remaining the fundamentally very positive, but at the same time, the valuation that which they are quoting, somewhere I'm not fully convinced about it. Maybe I think in the market corrections, whenever it happens, I think that would be the better time to buy into some of these stocks. I would rather stay with those ideas which you probably started mentioning about, say, for example, insurance business, say, for example, credit lending business, where you are seeing higher amount of growth continuing at the speed of around 20% or so. You are seeing this 20% plus kind of a growth in housing finance business. You are seeing 20% kind of growth in the new business premium that insurance companies are collecting on the life insurance side. I would think that I think these are relatively stable businesses and they give visibility to me for next 3 to 5 years. So would buy into those companies because they are also available at a valuation, which is probably giving me margin of safety comfort, if I may to put it, from my portfolio building perspective.
All right, Deven, stay on. We have lots more questions for you, but let's...
Deven Choksey is still with us, so let's get back to him. Deven, the stock I want to ask you about is Apollo Hospitals. It's had a dream run this year. I mean, this month the stock is up about 12%. And, you know, the management, of course, is very bullish on the whole digital arm, the Apollo 24/7 business. And JP Morgan put out a note, I think a couple of days ago, where they said that there is a big supply shortage in the industry, which is offering a very promising growth prospects for the current incumbent players. Your thoughts, is the risk reward still favorable for Apollo Hospitals?
So, Sonia, I don't know about, I think, the valuation aspects. I feel that I think the valuation has always remained on an elevated level. What I am particularly, I think, concerned about is, I think, the kind of money that this kind of business will keep on requiring for expanding the business. So from a shareholder's perspective, I think the money, free cash flow is definitely not going to be available because I think the expansion of the new rooms and new businesses, I think will continue, new properties will have to be continued, particularly for hospitals. So that is probably, I think, going to take away larger part of my cash flow if I'm an investor into the company. That is bothering me to a certain extent. And I think that is where probably I think I'm mindful about paying the valuation to this kind of companies. So there is no doubt about the growth that they are putting across, the number of beds that they are commissioning with a good growth plan that they have. So there is no doubt on that particular aspect. But this concern which I expressed, I think remains with me. So not very, very gung-ho about buying into it at a higher price.
Okay, got that. Deven, before we sort of, let you go today, we were just talking to Sula, had that detailed conversation. Your thoughts on either that stock or anything else? Let's say if you want to play something in the urban discretionary consumption basket, which stock would you go with?
So I think Surbi, Varun Beverages is one company which possibly we have been liking. Of course, I think the stock has its own run-up also in recent times. But in a couple of months back, I think the stock was probably available at a relatively more comforting levels. The largest bottlers is a mainline story that they have. At the same time, I think the growth prospects, underlying growth prospects remain very strong in this particular company's business plan. That is where we like this particular company. If I have to compare on a like-to-like basis some of the companies, Sula. Maybe I think this is a little different, but yes, we like this company from that perspective.
All right, Varun Beverages, look at that rally, 100%, over 100% in the last 12 months, been one of the biggest movers. Sula not too far behind, so people love their drink, it seems, and the stocks that are associated with it. We'll take a short commercial break. We'll come back with the pre-opening rates. Also, Mitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. In a bit, Rajesh Palvia of Axis Securities will also be with us to discuss some F&O strategies. Stay tuned.